Happy Macera Monday, everybody. This is Jessica Macera. I'm back. I am here today with Fernando Torres of Serro Taxes, and we are going to talk to you about ending the year strong. One of the most important things you can do for your business is have a great tax strategy. And so I have brought you a tax expert today. He's got some really creative ideas inside the line, but maybe close, to just give you the best advantages. And so I have a few questions I want to ask him, and we'll let Fernando give his best advice for ending the year strong. You have a couple of days left. So if you have questions about any of this, please reach out to Fernando. We will post his information on the info at the back of the video, in the links, in the info and comments, so that you can easily contact him. And coming soon, you'll want to watch these next few episodes because I have some exciting news regarding Fernando and all of his great wisdom and experience. So keep that in mind. Welcome, Fernando.
Thank you so much.
How are you doing?
I'm good, thank you.
Good. So as we're talking about ending the year strong,
Sure.
let's start with a couple of little things. Let's start with something like payroll. What can people do to maximize their business regarding payroll?
Sure. I think the biggest misunderstanding, sorry, one of the biggest problems that people and business owners fail to see is that you're going to pay some type of tax. So most people want to start off as an LLC, and so there's two parts to the tax system with an LLC. You have the self-employment tax on the profit, and then you have the tax on the individual earnings of that as well. So that's why sometimes it's called double taxation in a sense, because you do get taxed twice.
Bummer.
Yeah.
And so how do people do their payroll? So a lot of our clients, they just either take a draw or write themselves a check.
Sure.
Should they consider starting a payroll?
Yes. So because of that factor of paying the two taxes, you're basically paying what you would as if you were a W-2. Because when you get that net check, you pay the employee portion of the taxes, there's the employee portion, and then there's the federal withholding tax that, you might get $1,000 per week gross, but then your check is probably $800. And so having a payroll system where it's methodically taken from your bank account really helps, because I have clients who, one guy, his tax bill was $50,000. How do you pay that? April 15th or March 15th, how do you do that? So if you pay $1,000 per week or something like that, that will certainly help.
Definitely a lot more palatable, and damn the man, he gonna get his money either way.
Yes.
But that's a great way. I've experienced that in my own life. I had a couple of really good years right out of the gate and didn't have that money held back. Yes. And so, that didn't go very well on tax day.
It hurts.
Yeah.
And so, bringing these large tax bills to a client kind of hurts them and kind of hurts me. I've always tried to advise my clients throughout the year, hey, let's prepare by either payroll or converting your business to a different entity to save you on taxes.
Okay. So you just mentioned converting to a different entity. Tell me more what you're thinking about that.
Sure. So everybody hears about being a sole proprietor, an LLC, a corporation. So the corporation has two different sub-entities. Well, sub-taxation. Forgot the wordage. But there's two ways. There's the S Corp and there's the C Corp. And so for me personally, I take advantage of the C Corp for different methods that we can discuss at another time. But the S Corp will save you a lot of taxes, because from the profit that you have, you're taxed once. You're not taxed as an LLC where you have the self-employment tax and the individual taxation of that profit. With the S Corp, of course, you're paying some payroll taxes, but the difference is taxed once.
That sounds much better.
Yes, it does.
One tax or two tax? One tax or two tax? Which would you like? Maybe one. We can talk about that. So obviously you help your clients and advise them on what tax structure would be best for them.
Yes.
Right? Okay. And then also in terms of payroll, do you do payroll?
Yes.
Okay.
Yes.
So all they have to do is pick up the phone and call you. They can email you, text you, Okay.
Yes.
WhatsApp you, whatever.
Yes, whatever.
Okay, very cool.
Can I use an example
Yeah.
of the LLC versus the S corp?
Sure.
So I have one client in 2018 where they were basically almost all LLCs, and so he paid everything personally for the business profits. He made, we'll say, $280,000. That's almost what he did make gross, and his tax was about 50,000 plus, and so that was the example that I was using. In 2019, I converted, I think, all his businesses to S corps, and he made $20,000 more, so he made $300,000, but his tax bill was $40,000. So you can see the difference there by converting to an S corp.
Much better. Very interesting. Okay. All right. What else should we think about in terms of maybe like regular accounting throughout the year? Some notes that I took from our conversation before. Cash basis accounting versus accrual basis. Sure. What are your thoughts there?
Sure. Yes. So cash and accrual. Cash, of course, when it comes in, it goes out, and accrual is based on when the services were rendered or when you bill somebody. So, for example, if you send a bill through an invoice through QuickBooks and it was performed and sent out December 31st, it's recorded for that year. But the cash method, if you get paid January 1st, is recorded the following year. So there's pros and cons to each method. And of course, cash method is the easiest. The accrual, I would say if you have contracts, large contracts, so I deal with a lot of car dealerships. Okay. And so they have the buyer's orders where you have a car that could sell for $50,000 plus taxes and things like that. And so the state wants to have their sales taxes due in the month that it was actually sold, not when the money was received, because they could receive the money 2 months later because of funding with the financial institute. So it's very important for that case is to use the accrual method.
Very interesting. That's a good point. So if you have, maybe a large contract that is coming due, you're expecting the payment here in these last days of December, depending on what you're doing.
Sure.
Now, can you just switch willy-nilly? Like, is it that easy?
Yes and no.
Okay.
You can switch, but there are tax ramifications as well. So there might be a larger tax bill or a smaller tax bill based on the receipts and payables. Because now, yes, you're recording accounts receivable and accounts payable because there is none with a cash basis.
So you might want to think about... Well, I think there are several things to think about when you're choosing between cash and accrual. First of all, who's your accountant? Okay, I think that makes sense. I had something that I was going to say, and I'm hoping it'll come back because it seemed really smart at that moment, but we're still talking.
Sure.
It'll come back. So talk to me a little bit. Oh, okay. What about extra entities? If somebody, I know you are a master at this, so I've got a business. I want to take max advantage of my money. Is there a way that a second business might help me?
Yes. So I've been coming into my own when it comes to tax advice because in the beginning I had different tax strategy, and lately the last 2 years I've wanted to change my tax strategy up. So one thing that I'm doing is, of course, I have my C corporation, and then I have an LLC, and then my next step is to have an S corp because you want to use the pros and cons, well, mostly the pros for each entity and avoid the cons of the ones that you have. Like the C Corp, for example, you don't want to have a retained earnings because the only way to take it out is either by dividend, which has that extra tax based on your income, or through losses, which eat away at the retained earnings.
Okay. So can you give an example of a second business?
Sure. Yeah. So one thing during our CPA studies, or CPE continuing education classes, is when the QBI came out, there was a restriction placed on common ownership. So what the IRS foresaw, or legislation, whoever came up with the bill, was that the owner would try to mitigate their tax liability and move over some of the profits to an entity that could take advantage of the QBI. So what they were doing, because the QBI, once you make a certain amount, you don't get the QBI, and if you're in a certain industry, you don't get the QBI. So for example, if you're a lawyer and accountant, we actually don't get the QBI. So what they were doing is if they own the land or the building, they would create a separate entity for that land or building and charge their accounting firm, their law firm, rent. And so now, because of that, they can deduct, any profit from that, they can reduce their tax liability. But legislation, they foresaw that, and any common interest, they forbid anybody from doing that.
Okay. I don't think I understood a word you just said. So the important part, what my thought did come back, which about doing cash or accrual, you might think about that depending on how you anticipate this year will end up versus how next year will be.
Correct.
Right? So like if you think this year you have a big profit,
sure,
you might want to push profit, other profit into the next year, or you might not. But the whole point is, most of us probably don't understand tax very well. And if you would like to get more information on how you can end the year strong and have an awesome creative tax strategy, please give Fernando a call. He's amazing, and he can walk you through all this. And, we can do the backup work on that so that you don't have to do a darn thing. You just sit back and take advantage of Serro Taxes.
Yes.
All right, everybody. Have a great day. We'll talk to you soon.